Hey guys, Marianne Elliott from 360 Mortgage Solutions. So I wanted to jump on and talk to you a little bit about best interest duty. And the best interest duty is some compliance framework that as a mortgage broker I have to adhere to. The reason I want to talk to you about it is I want to show you how it means that I'm doing the best thing for my client and what the difference is when you're going to your local bank. So as a broker, to ensure that I'm adhering to the best interest duty, I have to not only find the right product that suits you, my client's needs, but I then need to marry up and explain to you how that relates back to your needs. So for example, when I'm in my appointment with my clients and we're talking about loan types, some of the things that I'll talk about are time frame. What time frame does the client have, and making sure that the banks I'm recommending can adhere to that time frame. What the flexibility of the loan, how often they visit the branch, what their priorities are when it comes to, do they want the cheapest loan in the market or the fastest approval? Do they want the lowest ongoing fees? Do they want an offset account or a redraw? All of these things and many more come into play when I'm recommending a particular product to a client. So how does this differ for when you go back to your bank for a loan? Your bank doesn't have to adhere to this best interest duty policy. So effectively, they don't necessarily need to educate you in things that may benefit you for your greater outcome. And they don't, by law, have to tell you if there's another product or service they have access to that would suit your needs better. As a mortgage broker, I do. So for example, how this works. I had an appointment with a client on Saturday via Zoom. And one of the things that was most important to this client was that they had a variable rate loan. They wanted the whole loan variable so that they could pay off extra repayments to their loan. Now, under best interest duty, I had to talk to the client about the fact that they had multiple personal loans. Not necessarily a bad thing, but obviously it's a higher interest rate they're paying on those personal loans. So if their long-term goal was to pay out those personal loans and get rid of them, which it was, then me putting their entire loan as a variable rate based on making extra payments to their loan is not necessarily in their best interest. What we talked about instead was potentially fixing a large chunk to help lock in those repayments and help them to set their budget for the next 2 years so they can make those additional payments onto their personal loans. Get those personal loans paid out and closed within the next 2 years whilst the loan is fixed, and then the loan will come off fixed. We can then re-look at the structure and work out what's in their best interest from then. So that's a little bit around best interest duty. There's obviously a whole lot more compliance-wise that it goes into, but just know that when you're talking to a mortgage broker, they not only want to give you what's in your best interest, but they have a legal obligation to. So other than that, guys, that's it for me. If you have any questions, please feel free to pop them in below. Otherwise, I hope you have a fantastic day and I'll talk to you soon.